welcome. I'm not here with you. I want to welcome you to our third and our final session, Prosperity Pathways or Pathways to Prosperity. And today we're going to be getting into possessing the land by enhancing your income through owning real estate, building businesses, making smart investments. And this session aims to empower you with the mindset and the strategies needed to actively expand your financial boundaries and secure lasting wealth. Before we get into today's topic, let's just kind of quickly recap what we've already talked about in the previous sessions. Our first session, we talked about the importance of controlling your credit, and we shared strategies on how to raise your credit scores and things to think about. We showed you some numbers and why this is all important. And in our second session, we focused on the debt, right? Deal with your debt. Right? Debt management techniques is what we talked about and gave you to help you to pay off your debt. And these foundational steps are critical as we move forward to discuss ownership, owning real estate, owning and building businesses, and smart investing. Today's session is all about possessing the land. So, we're going to explore how to enhance your income through real estate ownership, the importance of building businesses, the power of smart investing. And these are key strategies to help you to expand your financial boundaries and achieve lasting results. Now, before we get started, let's just ground our discussion in the Word of God. Deuteronomy chapter 1, verse 21 says, behold, the Lord thy God has set the land before thee. Go up and possess it, right? This powerful verse, it encourages us to move forward without fear, to move forward without discouragement, trusting that God has already paved the way for our financial success. And so, as we explore the different financial strategies today, I want you to keep this promise in mind. One of the key elements in achieving financial success is adopting a mindset of abundance. How do you see the money in your mind? Do you have a positive or negative outlook on your finances? Understanding your individual financial perspective is crucial. I want to say to you today that I don't want you to ever be discouraged or fearful about moving your financial future forward. I want you to know that, yes, it may seem like there's a lot to get done, there's a lot to accomplish. But guess what? You are able, you are capable, and you have the power to do all that's been placed in your heart to do. I understand that, yeah, there might be a lot of moving pieces, a lot of different things you have to consider, decisions you have to make, but you have what it takes. Why can I be so confident in that? Well, because the scripture says that you, me, we all have been given everything that we need for life and godliness. So you have what you need. And at the same time, I'm reminded of this. How do you eat an elephant? One bite at a time. You don't build a city in a day. So all of the things that we've talked about in this series, it can't be done overnight, but over time, as you keep going, you will achieve your goal. Dora, the explorer, I think that's on there. She said, just keep swimming. Just keep at it. Listen, we have more capacity and ability than we give ourselves credit for. I want to talk about what one of my financial mentors calls the money in your mind. Think about the money in your mind. What kind of picture do you see when you think about that? When you look at yourself financially today, when you look at your future, when you look at your money in your mind, do you see it as positive or is it negative? And when I say positive, I mean, is your outlook great? Meaning, you know you got some things in front of you, but you know that your best days are ahead of you and it's all good. Versus the negative, where maybe you got some things that you have to overcome, a lot of debts and challenges and other financial situations. So maybe right now you don't have a plan, or you don't have a real method to address your financial situation, and you're not feeling really good about that. What's really happening with the money in your mind right now? And I can tell you, I can really understand when some people feel um like it's all negative. Like, I understand. I get it. You know, your reality, when you look at it, is that you have some things to overcome. But listen, I want to encourage you with this. And I'm speaking from experience here. It takes intention and effort. There's no problem that's too big to solve from a financial situation. Most financial problems, they dissolve over time. So if you're looking at a situation and you're seeing negatives, that's okay, because when you apply the things that we've talked about in this series, you're going to turn those negatives into positives. And guess what? If you do nothing, they will resolve themselves over time. Okay. But I don't encourage doing nothing. That's going to take more time than you want, because you have goals. You have goals you want to meet. So that's not what we're trying to do here, right? Now, the next thing I want to talk about, or I want you to think about, is something that we've been talking about this whole time. And that is knowing your numbers, because in all things, it's important. It's important to know your numbers in everything. What are your credit numbers? What's your net worth? What's your cash flow? What's your debt to income ratio? You got to keep these numbers up, and you have to understand what those are every time you go to the bank, every time you go to a financial institution, when you fill out an application. These are the numbers that they are looking at, looking for. These numbers are the numbers that they actually use, because they're trying to get a snapshot of what your financial capability is. I mean, you want money from them, so they want to know what your ability is to pay them back, period, point blank. Now, I want you to think about the lifestyle that you want to live. How much is it going to cost you, right? There's a lot of people that think about what they want in life, but they don't necessarily have an idea of how much it costs. And they don't really know how they're going to fund it. How are you going to actually make that happen? The biggest one is retirement. So I want to ask you this question. Have you thought about it? Have you thought about how much it really is going to take you to support you and your spouse, if that is the case, when you retire? How can you start contributing to that now? Do you have a retirement plan? And if you haven't, don't worry, because a lot of people haven't figured this part out. But the bottom line is, the sooner you get going in terms of how you're gonna do it, how you're gonna go about it, the better it's gonna be for you. How do you know what your accumulation is gonna be in the year you want to retire if you don't have a number or a plan? So the point is that, we have to stop winging it when it comes to our financial futures. So how do we do that? Well, we've been talking about how to do that, right? We've been talking about the keys to the future. Mindset is key, right? Having faith to possess the land, knowing your numbers, where you are, where you want to be, where you want to go, dealing with your debt. And now we're going to talk about wealth building activities. And these activities that we talk about are not the end all be all, but they are some foundational things. Maybe you pick something and you go after that something that you want to focus on for your financial growth plan. So we're going to talk about real estate. We're going to talk about building businesses. We're going to talk about smart investments as wealth building activities. Before we get into that, I want to talk about prosperity, because this is, prosperity pathways, or pathways to prosperity, right? And so prosperity is a term that we hear, and I wonder if we really understand what it means. Is it just money? Is that what it means? Prosperity is often misunderstood. It's as merely just having money, right? However, it's more than that. True prosperity involves financial stability, it's emotional well being, it's spiritual fulfillment. It's about living a balanced and abundant life. And many people think that prosperity is only about money, but it includes your health, it includes your relationships, it includes personal growth. It's about having enough to meet your needs and the freedom to pursue your passions and your purpose. To truly prosper, we need to focus on all aspects of our lives. Financial prosperity is important, but so is our emotional and spiritual well being. So, a holistic view is going to help us to achieve lasting fulfillment. Understanding God's perspective on prosperity is key. The scripture we talked about, Deuteronomy 1 and 21, with that we read, behold, the Lord thy God has set the land before thee. Go up and possess it as the Lord God of thy fathers has said unto thee, fear not, neither be discouraged. And this verse also reminds us that God has already provided for us. And our task is to take a step forward, to take those steps forward in faith and claim the blessings that he set before us. Proverbs 23 and 7, you can jot these down there on the screen. Go look at them later or pause and bring it up now. But it says, for as he thinketh in his heart, so is he. This is why our mindset is so crucial in crucial part of prosperity. If we believe in abundance and trust in God's provision, we're most likely to experience it. Finally, Jeremiah 29 and 11. A lot of us know this, for I know the plans that I have for you, declares the Lord. Plans to prosper you, not to harm you, plans to give you hope in the future. God's plan for us is good, and he desires for us to prosper in all areas of our lives. So, understanding prosperity from a biblical perspective helps us to align our goals with God's will and to trust in his provision as we work towards financial freedom and our overall well being. So, I think we talked a lot about mindset and biblical mindset. And so, let's go ahead and get into the other pathways to prosperity because mindset is a pathway. But the other ones that we're here to talk about today is real estate, building businesses, and investing, and what these are and why they are important paths to prosperity. So, real estate, right? I am a big proponent of real estate ownership. I'm a big proponent of you owning your own place that you live, home ownership, whether it's a duplex, whether it's a townhome, whether it's a co-op, an apartment. Home ownership is key. Home ownership is the cornerstone of financial stability and long-term wealth building. Real estate Real estate offers not only you a place to live, but it's a tangible asset that can appreciate in value over time. When you own a property, it also can provide, financial security, tax benefits, and it's a sense of personal accomplishment. It's going to allow you to build equity that can be leveraged for future investments or to provide a safety net when you need it. Strategies up there on the screen here for real estate investment. There's a few of them, right? Each of them have their own benefits and their challenges. We're just going to take a look at a few of them. Buy up strategy. Well, this strategy, what is that? Well, that involves purchasing properties with the intention of holding on to them for a long-term appreciation. So you're going to hold on to those. You're going to buy properties in areas with potential for growth. And so you can increase your wealth as the property values rise over time. Remember when we looked at the net worth? So that's going to increase over time. Multifamily units, investing in multifamily units like duplexes, triplexes, apartment buildings, well, they can generate significant rental income. This strategy not only helps you to cover the mortgage, but also gives you a steady cash flow, which can be reinvested or saved for future opportunities. One of the things that, you'll hear is about buying a duplex or a triplex and you living in one of them because it ultimately is going to pay your mortgage. It's paying your rent. So now that's money you can save and put towards something else. Investment properties, purchasing properties specifically for investment purposes, like rental properties. When I purchased a duplex that we turned into a triplex, but that was specifically for rental purpose, right? You can also purchase properties for vacation, for commercial, diversify your income streams in real estate. And these properties can yield rental income and appreciation, which offers you a dual benefit. Fix and flip, you all have heard that. You've seen the TV shows. This strategy involves buying properties that need renovating, fixing them up, and then selling them for a profit. The key word is selling them for a profit because a lot of times we put more work into the property than you can get out of it. So it really takes a keen eye to see the undervalued properties and discipline so you don't spend more than you plan to earn, and the ability to manage the renovation project efficiently so you can keep your costs low and you can close in specific time frames. Now, this can be a risky investment strategy, but the potential returns are significant. Leveraging equity for future investments. Well, as you build equity in your properties, you can leverage this equity to finance additional investments. So your homes can have home equity lines of credit, and it's going to be able to give you the capital that you need to purchase more properties, and that will help you to expand your real estate portfolio. So let's talk about the steps to getting started. Well, the first thing you want to do is educate yourself. Understand that the real estate market is, or I should say, understanding the real estate market is crucial. You have to understand it. Take time to learn about it. Learn about property values, learn about market trends, learn about investment strategies. Read the books, takes the courses, and consider whatever area you want to go in, finding a mentor that has experience in real estate investing. The other thing you want to do is assess your financial situation before you even start investing in real estate. Take a look at your financial health. So that's why you want to do the other two things first before you get into this one. Right. And then evaluate your financial health. Make sure you have a solid credit score, you have a manageable debt load, and you have enough savings to help you for down payments and potential repairs or renovations, things that come up with properties that you may not have planned for. You want to have a budget for those unplanned things, right? The next thing is you want to set clear goals, determine what you want to achieve with your real estate investments. Are you looking for steady rental income? You looking for the long-term game? Do you want quick profits from flipping properties? Set the clear goals. It's going to help you to guide your investment decisions and even your education decisions, and even your team, excuse me. So your team decisions, who you partner with, right? That's going to be important. You need to know your goals in order to know who you need to partner with. Um, Create a budget and a plan. Develop a detailed budget that includes, your purchasing costs, renovation expenses, ongoing maintenance. Have a plan for managing your properties, whether you handle it yourself or you hire a property management company. If you buy a piece of property that's for investments, or I'm sorry, for rental, are you going to manage that rental? Or are you going to have a property management company do that? Are you going to go find the renters? Or are you going to have a rental company do that? Start small. So if you're new to real estate, don't go getting 6 properties or a big old 20-door building. Start with a single property. Get your feet wet. And it's gonna allow you to get the experience, know if you even wanna go down that road, because some people don't, and it'll help you build the confidence without overextending yourself financially, so start small. Build a team, surround yourself with the professionals, right, who can help you to succeed at this game. That's gonna be your real estate agents, mortgage brokers, contractors, property managers. Find strong team members that can help you and give you good advice and support as you work through investing in this area. And you also want to monitor and adjust, keep a close eye on your investments and be prepared to adjust your strategy as needed. Don't just leave it in the hands of the property manager. You keep a close eye on your stuff. It's your stuff. It's your money. That's your money. And be aware that market conditions they change. So you got to be flexible, and knowing what those conditions are is going to help you to navigate the challenges and look at and take on new opportunities as they present themselves. So, real estate investment is a powerful pathway to prosperity. And when you understand the importance of home ownership and employing effective investment strategies, you're going to be able to build a robust portfolio, one that gives you good financial security and growth. Remember, start small, educate yourself, build a reliable team to help you to support yourself on this journey. And then with patience and persistence, you're going to achieve significant success in real estate and secure lasting wealth. I do that one first because I think it is, in my opinion, one of the best avenues to do. Okay. The next one is, what did I do here? I don't know what this is that I somehow put a timer on my screen. Okay, I got rid of it. I don't know how did I do that? I don't even know what I pressed. Uh, okay, so the next thing I want to talk about is business building and entrepreneurship, because starting and growing a business is it's another effective way to build wealth and create financial stability. Entrepreneurship offers the opportunity to turn your passions into profit. It gives you the flexibility to shape your own future, to shape your own destiny. And so let's just talk about some ways to get started. Identify your idea. Start by identifying the business idea that aligns with your skills, with your interests, with the market, right? And then consider what problems can you solve, or what's your unique value that you offer to your customers. Do some market research. So research your target market to help you to understand your customers, their needs, and your competition. And this is going to help you to refine your business idea and help you develop a solid business plan, which create a business plan, right? Create a well-crafted business plan that helps you to outline the business goals, the target market, your marketing strategies, financial projections, and your operational plans. It's kind of like your roadmap for your business, and it is essential for securing funding. Which, speaking of, you want to secure funding, determine how much capital you need to start and run your business, because there's a lot of no cost things that you can do, but you still need money. I don't care what anybody says. You still need a couple dollars to run and start your business. So you need to find out, depending on what type of business you're starting, you need to find out, well, how much money do I need for that business? See, a brick and mortar business is going to cost you more money than a virtual business. So you need to explore different funding options like personal savings, loans, grants, or even other investors. But if you have a clear financial plan, that's going to help you to manage your resources effectively. The other thing you want to do is choose a business structure. You're going to be a sole proprietor, partnership, a LLC, and each structure has different implications for a tax liability, for liabilities, and just regulations. So you really want to research that as well so you can find out which one is the best for you. And that may change as your business grows. So if you started a sole proprietorship, you may, turn into a LLC later. And then after that, you turn into a corporation. So, not to say that that's your path, just saying that that is a path. So, it can change over time. Register your business. So, register your business name and get your necessary licenses and permits. And this is going to help your business to operate smoothly and be compliant legally. Set up your finances, open a business bank account, set up an accounting system to help you to keep track of your income and your expenses. One of the things that my cousin, she's the one that does my taxes, and, one of the things she loves is that I have my business in order when I give it to her. I don't leave that up to her to figure out because I need to know my business. So, proper financial management is critical to the success of your business. Also, you want to develop a brand. So, you create a strong brand identity that's including your business name, your logo, your marketing materials, and your brand should reflect your values and appeal to your target market. Then you're going to build your online presence in today's digital age. Having an online presence is essential. So you're going to create a professional website. You're going to engage on social media. You're going to consider online advertising to reach a broader audience, even with a church, even with ministries. I mean, it amazes me when I went to go look at this ministry that's up the street because we were looking at churches and so we went to this church. Well, we didn't go to the church, but I take a look online. And when I take a look online and I don't even see that you have an online presence, I don't want to go to your church because it says to me that you are in, you're just not the ministry for me. I need you to be more 2024, okay? So you do want to have those things in place. A lot of those things don't cost, but some of them do. Launch and market your business. So you're going to plan a launch event to launch your business. You're going to market things. You're going to introduce your business to your people, to the market. And you're going to use various marketing strategies like social media, email, networking to attract customers to your business, even to ministry. Like I keep sticking that in there because we forget that we need to do those things even in ministry. Realizing that this effective financial management is key to sustaining and growing your business. So, we're going to talk about some tips, but it's key, just like it's key for your home, it's key for your business, right? So it is important that you keep accurate records, maintain the daily records of your financial transactions. That's your sales, your expenses, your payroll, your taxes when you get to those levels, right? Accurate records are going to help you keep track of your financial health and help you to make informed decisions. It's just like, your personal. You're going to be able to know um yeah, I'm gonna have to put off that class. That's gonna cost me $1,000 till later. I'm gonna have to build to that, right? So it's gonna help you to make good decisions. Monitor your cash flow. So regularly monitor your cash flow to make sure you have enough funds to cover your expenses. Positive cash flow is so important, just like when we talked about in the personal side, on the business side, you want to have positive cash flows. And that is so important for your day-to-day operations and the growth of your business. If you implore a virtual assistant, let's say, you got to have a positive cash flow so you can pay for that. All right. You want to budget wisely, create a budget. So if you don't have that in the budget, you're not going to be able to pay for it. So you have to budget your income and your expenses, stick to your budget, strive to meet your income goals, and avoid overspending in your business is one of the things that I am still working on. Overspending in the business, I have to do just like on the personal. No, you don't need that right now. Forget about the FOMO, which is the fear of missing out. Later on, you can get it, and if if the price went up, it just went up. Plan for the up, okay? Plan for the up. If you plan for the up, guess what? It'll keep you from spending money on things that you don't really need or you don't need right now. Um, Invest in growth. So make sure to reinvest your profits back into your business. It's going to fuel the growth of your company. And this could include expanding your product line, hiring additional staff, or just upgrading your equipment, right? And then, lastly, seek professional advice. Consider hiring an accountant as you go along. You want to hire an accountant. You want to hire a financial advisor to help you to manage, and multiply your finances in your business, and they can give you expertise and give you insights to help you avoid costly mistakes. Using business as an asset for long-term wealth. When you build a business, it's not just about generating income. It's about creating a valuable asset that can contribute to your long-term wealth. So how do you leverage your business for sustained financial growth? Well, you're going to scale your operations. So you look for opportunities to scale, which means to grow, right? Whether you're expanding your product line, you're going into a new market, or obtaining a franchise, scaling can significantly increase your revenue and profitability. Remember also, to build a strong team, you need a strong team as a business owner. Even if you're a sole proprietor, you want to think about in investing in hiring and retaining talented employees, because a strong team can help you to drive your business forward, and it's going to contribute to your ultimate success. Diversify your revenue streams so additional revenue streams can reduce your risk, right? You don't put all your eggs in one basket, and it's going to help you to increase your profitability. So this can be new products, or services, create digital products, develop mentorship programs, things like that. Protect your business. So make sure your business is adequately protected with the right insurance policies. And this is going to be liability insurance, property insurance, and business interruption insurance. All these things you need to think about. Maybe not all at once, depending on the type of business that you have. Plan for a succession, right? Develop a plan for the continuity of your business. This could involve, training for your successors, selling the business, or you're going to pass it on to family members. That's that long-term thinking. If you're thinking about build a legacy, right? How can your business contribute to your overall legacy plan? This might be philanthropic kind of plans that you might have, community involvement, creating a brand that stands the test of time that can be handed down. So, pretty much building and growing a business is a powerful way to create wealth and financial independence. And so, when you follow these steps and manage your business effectively and leverage your business as a valuable asset, you can achieve long term success and prosperity. Remember, entrepreneurship is a journey that requires dedication. It requires resilience, and it requires a willingness to learn and adapt. Embrace the challenges and the opportunities that come your way, and you'll be well on your way to a path of financial freedom in business and entrepreneurship. And the last thing that we're going to talk about today is smart investment strategies. So, investing wisely is critical. Now, I'm not a financial advisor. I just want to put that out there. So, this information is for educational purposes and your awareness. But investing wisely is critical to building long term wealth and achieving financial independence. So, when you understand the investment vehicles that are out there and the strategies that you can use, you can grow your money and secure your financial future better than if you don't understand it. So, here's some things that you want to look at and consider when it comes to smart investments. What you can do now, investing involves putting money into an asset, right? That has the potential to grow in value over time. So the common investment vehicles are 401ks and IRAs. So on your job, you most likely have a 401k. And if you don't, you can open up an IRA. These are retirement accounts that offer tax advantages. A 401k is typically offered through your employer, while an IRA is an individual retirement account. You can set that up independently, but allow your investments, both of them allow your investments to grow tax deferred. And in some cases, contributions may be tax deductible. So you have to look into all of that. But that's a great way. You get it. Listen, on your job, they got 401k. It comes out of your paycheck before you even know it. Okay. Now I've worked look, I was on a 401k team. Don't set up your 401k and then use it as a bank. So I have people, they set up the 401k, and then they're constantly calling in every month to withdraw from the 401k. First of all, it's just not, don't let me go there. It's just not a good idea. So, This is money that you're putting aside. Okay, let me just say that. All of this, stocks, stocks, investing in stocks means buying shares of a company. Stocks can offer higher returns, but they come with higher risks. So you can use platforms like Stash. And Stash makes it's user friendly. Listen, if you want a link for Stash, let me know. But Stash makes it user friendly for you to start investing in stocks. My mom would be on there and talking about she she took out some money and she said, "My thing is up back to where it was." So she's obviously in some good stocks there. So yeah, so stocks, but it does come with a higher risk because what goes up, it comes down. So, and it goes back up again. So, different things like that. Bonds. Listen, the first investment I think that I made was in bonds because my company that I work for, they offered bonds. And so I'd have them take out, I think it was $10 a paycheck, and I got 50 or $100 bonds. So bonds are loans you give to a corporation or a government. This was government ones in exchange for regular interest payments and the returns of the bonds at the face value when it matures. So they're lower risk than stocks. They're still a risk, but they're lower risk than stocks. And so I had the bonds that would come in the mail. If it's $100 bond, I'd have to get the $50, and then they purchase a bond, and in 10 years, then I can cash out to the whole $100 bond, right? And I had quite a few of them. Okay. So bonds is an avenue. Real estate, we've talked about real estate extensively, but real estate involves buying property to generate income or to appreciate in value. This can also include REITs. So REITs is a fund. It's an investment trust, a real estate investment trust. So REITs is something for you to look at. Cryptocurrencies and Forex, those are virtual currencies. And so cryptocurrency is a virtual uh, currency. But there's other things, Bitcoin, Ethereum, just a whole slew of them out there. The potential returns are great, but they come with so much risk. I feel for the people who they went and put their whole I've seen it, I've heard it, where someone has put all of their life savings into a virtual. Never put all of your eggs into a basket. The only basket that I would say to put all of your eggs into, if I were going to do that, would be home ownership. That's the only basket. The Forex, foreign exchange, that involves trading currency. Oh my God. And that requires a good understanding of the global markets and economics. That takes education. Okay. It operates 24 hours a day, but it is highly risky. Okay. So, but so you know some things that are out there. And oh, yeah, how come that didn't go? Okay. So you have to understand what your risk tolerance is before you make any investments. What is your risk tolerance? Well, this is how much risk you are willing to take with your investments, you are able to take with your investments. And what you want to factor in for your risk tolerance is your financial situation, your investment goals, and even your personality. Higher risks can lead to higher rewards, but it also means greater potential for loss. So, what's your risk personality? Are you risky? Investment horizon. Your investment horizon is the length of time you expect to hold on to an investment before you take that money out. So, short-term investments, less than 3 years, are generally less risky because you don't want to risk it. Um, while long-term investments, more than 5 years, can afford to take on more risk for potentially higher returns. Okay. The rule of 72 is important to understand. It's a simple way to estimate how long it will take for an investment to double in value. Um, Given that you have a fixed rate annual rate of interest. So you use the rule of 72. To do that, you divide 72 by the annual rate of return. For example, if your investment earns 8% per year, it will take approximately 9 years to double. 72 divided by 8 equals 9. Compound interest means that you earn interest not only on your initial investment, but also on the interest that accumulates over time. And that can significantly boost your investment growth. Creating a diversified um, investment portfolio is going to help you manage risk and improve your chances of achieving your financial goals. So, some strategies to consider: diversification, spread your investments across various assets, what we've been talking about, stocks, bonds, real estate, and the different sectors to reduce your risk. So, you want to diversify. That's that. I'm not keeping all my eggs in one bucket. So if I invest in one company and that company does poorly and I have all my investments, all my money in there, oh man, that's going to really, but if I have it spread out, then I reduce my risk because others may perform well and all of that balances out your portfolio. You want to consider regular contributions. So consistently adding to your investments through monthly contributions can help you to build your wealth over time. And this is known as dollar cost averaging. And so it's going to reduce the impact of market volatility by spreading out your investments. Okay. That's a deeper conversation than just that, but just know that that's it. Rebalancing. Rebalancing requires you to periodically review your portfolio and adjust it to maintain your desired asset allocation. Rebalancing involves selling some assets that have grown and buying others that have not others that have not performed as well to keep your portfolio aligned with your risk tolerance and your goals. So you're going to rebalance them to, maybe even get rid of the ones that weren't working and get into some that is, and that's called rebalancing your portfolio. You want to stay informed? Stay informed. Look at the news. Look at the finance. Go to CNN and look at the financial news. Look at the market trends, right? Make informed investment decisions. Understand the factors that influence the market. Listen, when the president speaks, it's probably not a good time to sell stock because depending on what comes out of their mouth, that stock is what we call volatile. So you don't want to do that, right? Certain reports come out. Okay, it's going to cause the markets to uh, fluctuate. So you want to consider those. Ultimately, you want to seek professional advice because you're not professional. I'm not professional. We get better at it as we get educated, but you want someone who is an advisor, who is skilled in these things and can give you some personal advice and guidance on your specific situation, goals, and your risk tolerance. The last thing really that I want to talk about is protecting your assets. Protecting your investments and your assets is critical for long time financial security. Some types of ways to safeguard your assets would be insurance. You got different types of insurance. Life insurance gives the financial support to your beneficiaries in the event of your death. Health insurance covers your medical expenses and protects your savings from high health costs. Property insurance protects your home and other properties from damage or loss. Disability insurance provides income if you're not able to work due to disability. You got legal protection, so that's wills and trusts. So wills make sure that your assets are distributed the way you want them after you pass. Trusts help you to manage and protect your assets for your beneficiaries. And estate planning, plan for the management and disposal of your estate to minimize taxes and the legal complications that come that you won't be there to see. But you're doing this all for the people that you wanted to benefit, the reason why you created the legacy, right? Develop a crisis budget and emergency plan. So, crisis budget, have a budget in place for, unexpected financial setbacks because they come. This life, they come. And this could include cutting non-essential expenses and prioritizing those essential ones. Like, I'm gonna get rid of cable. I'm gonna get rid of some things, right? Emergency fund. Make sure you have 3 to 6 months worth of living expenses. Now that number's kind of gone up. It's more like 6 months to a year, okay, to cover your unexpected costs, such as medical bills or job loss. So, smart investing strategies are important for building and maintaining long term wealth. And when you understand the various investment vehicles, you assess your risk tolerance and investment horizon, and you employ effective portfolio building strategy, you're going to achieve financial growth and security. When you protect your assets through insurance and legal planning, that's going to make sure that your wealth is safeguarded for the future. Remember, investing is a journey. It's a journey that requires patience. It requires knowledge and it requires effort. That's how people get into trouble because they forget. It's a journey. So if you're looking for that fast pace, it don't always pan out. So, but when you look at these strategies and you are patient and knowledgeable and consistent, you're going to confidently navigate the investment landscape and really work your way towards financial prosperity. So, as we wrap up on today's session, um, of possessing the land and pathways to prosperity, what did we talk about? Well, we talked about adopting a mindset of abundance. We talked about real estate investment, and we talked about business building and entrepreneurship and investing smartly and protecting your assets. And so what do we do now, right? Um uh Oh, that's what it is. So, what do we do now? I forgot to move the slide forward. So, moving forward, okay, moving forward. Remember the journey to financial prosperity is not a sprint. It's a marathon. And that each step you take, no matter how small, brings you closer to your goals. Embrace the principles that we talked about. Stay disciplined and trust the process. Jeremiah 29:11 assures us that God knows the plans that he has and that he wants you to prosper. He wants you to give you a hope and a future. So your action steps there are going to be to set clear financial goals. You're going to educate yourself. Continue to learn about these strategies that we talked about. Build your network. Surround yourself with people who are like-minded, who can support and guide you in your financial journey and stay faithful. Um, Stay faithful there. And then, finally, as we conclude, I just want to leave you with a little bit of encouragement there. The journey to financial prosperity is filled with opportunities. It's filled with challenges as well. But remember, you have the power and the resources and the support to achieve your goals. I want you to take each step with confidence, knowing that God is with you every step of the way. I want to close out, do something different, just a little short prayer we haven't done. But Father God, we thank you for this time that we've had together, for the wisdom and for the knowledge that have been shared during today and the other series. that we've gone through. And we pray that you continue to guide all of us on our financial journey, that you would help us to make wise decisions. You would help us to trust in your provision. I pray that we would use our resources and the talents that you've given us to glorify you and to build a prosperous future for ourselves and for our families. In the name of Jesus, I pray. Amen. So I hope you came into agreement with me on that. But I want to thank you for joining this session of Prosperity Pathways and ultimately joining into our um, discussion here for the past series. I hope that you go forth with confidence, that you go forth with wisdom and faith as you work toward possessing the land and securing your financial future. If you have any questions, you need more from me, remember, feel free to email me at hello@smartmoneysisters.com. We'll get those answered for you. You can also schedule some time with me to see how I can help you to move the needle forward, get you to the next level in your financial transformation. Remember to go to smartmoneysisters.com. Join the Facebook group as well. So all the links are there as well. So join our Facebook group there so we can continue to be a blessing to one another. And ultimately, listen, I want you to be blessed. I want you to be fruitful. And I want you to multiply. Take care.